If anybody can describe the month of June, I would say it was a slight sigh of relief after May's inflation data posted a decline and the Federal Reserve paused rate hikes. However, it showed that the market was still in a state of speculation where the future can only be determined in the short term as inflation data comes out and as the Federal Reserve makes decisions at its meetings. As a result of not knowing what direction the market will go, the Las Vegas market showed its first decline in monthly inventory comparisons. In addition, median sales prices are continuing to decline and contract activity still suffers. Seeing the recent inflation data for June and the Federal Reserve meeting on the horizon, in what ways will June's market report for Las Vegas surprise us? Well, wonder no more as we evaluate June's market report. Before we start, don't forget to subscribe and follow me on the other social media platforms for more real estate content. Now let's begin. First up is the median sales price. June clocked in at $400,000, which is 1.48% less than May. Year over year, the annual prices have shown no difference. This is the fourth month in a row that monthly sales prices have declined, and it's the first time that annual comparisons have leveled out. What does this mean for the future of price growth in the Las Vegas Valley? Now we go to inventory in the Las Vegas Valley. June shows up at 10,235 units, a 3.1% decrease compared to May. June of 2022 displayed a difference of 56.4% for the yearly comparison. This is the second time we see monthly inventory post a decline. Will inventory continue to decline for the rest of 2023? We now cover pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. June sits at 31,952 units being under contract, marking an increase of 0.6% when compared to May. June of 2022 had a difference of 33% year over year. We go from pending to the final stage of an escrow, which is closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. June clocks in at 31,745 units closing, marking a decrease of 1.34% when compared to May. June of 2022 showed a difference of 35.8% year over year. We now go to our final stat, which is median days on market, or in other words, how long it takes for a listing to go live on the market to an accepted offer. June sits at 23 days on market, which is 2 days more than May. Annual gains show a decline where it took 8 median days to sell in June of 2022. As the months go on, we see the days on market increase at a considerable, consistent pace. Alright, I'm going to cover the notable developments, then give you some trends to look for in the future. Some things are going to sound like a broken record, but some developments will be new. The seller's market is still present, but there are still market conditions that indicate better positions for sellers and better positions for buyers. True, contract activity continues to decline, and the days it takes for a property to go under contract are increasing at a noticeable rate. Not to mention, June marks the fourth month in a row where the median sales price has dropped. However, June continues the decline of inventory month to month, granting some leverage back to the sellers. Even though inventory dwarfs what it was last year, inventory is still surprisingly low relative to the current buyer demand. However, the listing strategy still matters. To get the best results, listing at fair market value will give the sellers the best chance at getting multiple offers in the shortest amount of time. For buyers, some market stats could be better. Of course, the previously mentioned factors of declining contract activity, increasing days on market, and a falling sales price all come together to give buyers more leverage in the potential negotiation. In fact, there is one stat to take note of, and that is the monthly increase in pending transactions. The fact that it has gone up, albeit very, very slightly, shows that buyers are showing a small degree of adaptation in regards to the current market despite affordability challenges. However, even as inflation nears the target percentage of 2%, mortgage rates are still elevated at a level that makes affordability difficult. Not to mention, we have yet to see what the Federal Reserve will do in its future meetings, even with the encouraging inflation data for these past few months. We also had to factor in that inventory posted a second monthly decline, although it remains to be seen if this pattern will continue for the rest of 2023. Interest rates for mortgages may peak soon or start increasing again. It all depends on the outlook of the Federal Reserve for the rest of the year. We will just have to wait and see. Now, as always, keep your eye on the Federal Reserve and inflation reports. There is absolutely no doubt in my mind when inflation data for June posted 3% inflation, the relief was certainly real. However, we don't know how the Federal Reserve sees this. Most pundits say that despite the encouraging inflation numbers, they anticipate that the Fed will raise rates by a quarter point, but have no idea what they would do after the July meeting. This puts the spotlight on July's meeting on the 25th as we wait and see what the Fed will do next. The next inflation report on July's inflation numbers will come out on August 10th. Well, that wraps up June's market report. If you have any questions about real estate, please don't hesitate to contact me over the phone, email, or any of my social media platforms. This is Oscar St. Juan with Vegas Strong Real Estate Group, signing off.